Hello, everyone. This is Ted Bauman here, editor of the Bauman Letter. This is the weekly podcast, but unlike my usual podcast, I've got somebody that I want to interview today and share with you insights. It's Rich Checkan, who is the Chief Operations Officer of Asset Strategies International, a company that I've been associated with and have admired for a long time. So, Rich, welcome to the program, to the podcast. Tell us about yourself and about ASI.
Well, thanks for having us. Obviously, we go back a long ways, Ted, and the admiration is mutual, I can tell you. The company itself started in 1982. It's a Rockville, Maryland-based company, and we primarily focus on really two areas, and it's precious metals and numismatics or rare coins. Okay, the primary thrust of our business is the bullion business, and it's for times just like these. So we've been buying and selling gold, silver, platinum, palladium for delivery to your doorstep, to a vault domestically or abroad. We offer certificate programs. We offer metals in your IRA. We offer a lot of different things, but it all comes down to those four metals.
Right. So I'm going to come back to the current state of the market in a moment. I want to ask you about that. But first, convince me why people should be holding physical gold or an equivalent no matter what.
I've just seen it through experience, Ted, and I think you have too. I think you're playing devil's advocate here on me, but I have seen clients tap into their wealth insurance. It's primarily why we sell gold. To me, gold is the protection for everything you've worked for and built up over time. As I state, it's a store of purchasing power in a very liquid form for a potential financial crisis you hope to never have. And for me, that's about 10% of a portfolio, and I maintain it, and I never sell it. I don't care what the price is. Unless I have a financial crisis. And I've seen personal issues where clients have tapped into that. I've seen corporate issues where clients have tapped into that. I've just seen too many examples over my lifetime where I think if you don't have it, you're missing out and you're potentially at danger financially.
Right. Now, there are a lot of people watching this video who are new to the idea of gold as a long-term store of value. So give us the basics. How does gold relate to the dollar? Why should the average investor want to do something like this, no matter what's happening in the markets?
Well, it's the first part of what I just said. It stores purchasing power, unlike the dollar or any other fiat currency for that matter. So, I always use the example of a ruler. All right, if I take the ruler, which is my measuring instrument of length, and I measure the length of my desk, I'm going to come up with a certain number for that 12-inch ruler. Let's say it's 4 feet, 6 feet. Then the next day, if I chop an inch off the end of it and I take the measurement again, I'm going to get a different measurement. And that's kind of what's happening when we measure gold with the dollar, using the dollar as a unit of measurement, or a euro or a yen. With mismanagement, that dollar, that euro is less valuable. It's worth less as it's mismanaged. And then we measure gold with it, and it looks like gold's price is going up. And what's happening is our unit of measure is going down. I think we should be measuring things with gold because it stores value as opposed to measuring gold with dollars.
So we should be measuring prices in units of gold. That's interesting.
You'd have a steady metric that you can compare over millennia, as opposed to something that can change monthly. Right.
Now, let's talk about the state of the current gold market. I'm aware that things are a bit crazy at the moment. What's happening?
Well, a lot of people will tell you, if you listen to the mainstream, that this is all about COVID-19 and the coronavirus pandemic. I could tell you it's just not true. We've been watching this. I know you've been watching this for some time. We saw the lows of the last bear market in gold and silver hit about December of 2015. Gold bottomed out at $1,050 an ounce, silver about $1,383 roughly. And they've been steadily kind of trying to walk up since then. And we had about 1.5 to 2 years where gold really struggled to get past significant resistance at $1,300 an ounce. So it stayed in a range of about $100 an ounce for about 2 years. last May of 2019, is when it broke out, and voraciously. So gold went through that level, through 1400, through 1500, and finally stopped at 1550. After 2 years of trying to get past 1300, we pulled back, and we've been stair-stepping ever since. So the fire was burning. And then February and March of this year, somebody threw kerosene on the fire by the name of coronavirus, and it's been off to the races ever since.
Right, but that kerosene came indirectly, didn't it? Came via the Fed. How does the Fed's policies influence this?
Oh, that's a great question, because everybody blames this on the pandemic and fear. I blame it on the response of the governments across the globe to the pandemic, shutting everything down. Personal opinion, I just don't think it was the right answer. I think we created another problem on top of a pandemic that we're fighting. And, if people don't have the ability to support themselves, to have their livelihood, et cetera, how are we going to find the funds, et cetera, to fight this thing? Right. So what they've been doing is they've been throwing stimulus out, helicopter money, right?
Right. Now, on top of that, of course, the Fed has been pushing down long-term interest rates, which means that, because long-term bonds are an alternative to gold in some people's minds. So one of the things that, to me, that seems to be pushing gold up is the fact that you're just not getting anything for a 10 or 20 or 30-year treasury bill. So you might as well hold gold. Has that had an impact?
It absolutely has. Low interest rates or negative real returns absolutely remove any negative connotation to owning gold. You don't have any opportunity cost when there's really no other alternative to growing your assets.
Right. So if after inflation you're not going to make any money from a treasury bill, and if gold is guaranteed to keep pace with inflation, it's always going to grow as the dollar declines, you want gold.
It always has, yeah.
Right. Now, what's happening with people trying to get their hands on gold at the moment? Actually.
It's difficult. So if you think about it, we came through a period of about 2 to 3 years, like I said, where gold wasn't in demand. Sentiment was so low, so the mints cut back on what they were producing to start with. Throw into that mix the pandemic. So the mints, just like everybody else, they have to social distance, they're working shift work, their production is way down from what normal operating capacity would be, so they're not making as much. On top of that, demand through fear or whatever has surged massively. Put all that together and it's not a good combination. There's no shortage worldwide of gold and silver. It's out there, but the folks that make it into something that investors buy is a problem. So they've cut back the less commonly bought items, fractionals, things of this nature. They've just simply stopped producing, and they're only sticking to 1 ounce gold, 1 ounce silver coins, the things that people buy most readily. And there are some delays, and higher premiums come with a short supply.
So how are people coping with those higher premiums? Are there alternatives to buying, those? I mean, there are ways people can get their hands on physical gold, maybe indirectly, to try to get around that premium?
Yeah, well, there's two things. One, if you have a trusted metals dealer, consult them. If you don't, we're available. But the bottom line is what we're going to do is we're keeping tabs on that market daily, and we can see what coins are available and where the premiums aren't as bad as others, and we can guide you through those waters. Another really simple alternative is something I think you're aware we've been working with for 25 years, and that's the Perth Mint certificate program. There, if you don't mind not taking delivery, okay, if you're okay having a government guarantee stored at Perth Mint in Western Australia, you can buy gold, silver, and platinum at 2.25% above the spot price. All right, so cheaper than buying physical coins. You have, because you're saving the fabrication fee, you have no ongoing storage fees, and you have that government guarantee. So it's an incredibly cost-effective way. And like I said, silver, gold, platinum, they're not short worldwide. It's just the minted stuff. So if you can buy it without the minting, there's an ample supply. You could have delivery immediately and have no inflated premiums. It's a great option.
So I want to stick with that for a moment, because I've written a lot in the past about programs like Perth Mint and others. And I think the important thing, folks, is that, when you own physical gold, you don't have to keep it at your home. In fact, there are plenty of other ways to own physical gold in your own name that are just as secure and have all the benefits of it that allow you to do all this without having to do anything besides go on your computer and make a purchase. So tell us, I mean, How does that actually work? I mean, when you own a Perth Mint certificate, what do you actually own, and how does that work?
Well, first off, understand that even though you're not going to fabricate it and you're not going to take delivery of it, the government guarantee promises that it will be 100% backed at all times under their control on their premises. Okay. Two, it will never be short. So if they have an obligation to you on a certificate, it must be 100% backed, unique to you at all times. They never use it as backing for derivatives, and they never lease it out to third parties. It is metal that's sitting there. And there's probably more time than we can take right now to explain why they can do that. But believe it or not, it actually saves them money over leasing metal from the bullion banks in order to have product waiting for the world to demand it. They replace the bullion banks with you. Your benefit or your reward for that is no storage fee. It costs them about 0.5% to store that metal on an annual basis, and they give it up to have the flexibility of having metal there made up in various forms. So if you have 100 ounces of gold, you may one day own a 100-ounce bar. You may one day own part of a 400-ounce bar. You may one day own 100 kangaroos. The bottom line is the metal will always, what's that?
Kangaroo coins, let's be clear.
Yes, kangaroo coins, yes, 1 ounce gold kangaroo coins. So you own the metal, it's always there, it's always unique to you, but the form can change. So if a buyer comes into the Perth Mint and buys 10,000 gold kangaroos at one time, they can immediately fix a price and ship it, and then right away they buy another 10,000 ounces off market and start making them again. But you always have metal covered at all times, and that's an important point.
So we're talking about the Perth Mint, government of Western Australia, is that?
Yeah, state government, yes.
Right, state government. And of course, some of the world's biggest gold producers are in that part of Australia. So that's why they had this big operation. Now, a lot of people in the Bauman earlier this year, we sent out what we called a bear market survival guide. And part of what I recommended was people buying into gold. Now, at the time, I recommended people buy gold ETFs of different types, mainly because of the flexibility. And some people wrote it and said, well, what if I want the gold? What if I actually want to take delivery? Can you do that with Perth Mint?
Absolutely. You can have it fabricated. You pay the cost at that time to make it into a coin or a bar, and then they ship it to you worldwide. We'll give you a quote for it, and it happens. My only caution on the ETFs, and I like them. I think they've done a lot for awareness of the metals market. I think the institutions, it's a perfect vehicle for them to participate in that market. My concern is a lot of people don't really understand what they're buying into. They don't understand they're owning shares of a trust who mimics the gold market, right? And you can't take delivery. So I tend to like people to buy physical coins first and take delivery themselves up to a point where they feel like they can meet a foreseeable financial crisis and they're comfortable storing and safeguarding it themselves. Anything over and above that, I would put in the hands of the professionals, or consummate professionals, most cost-effective option out there. The thing that most people don't understand is storing it yourself is the cheapest way to do so until it's lost or stolen. Right. Most expensive.
And of course, I've actually written in the past about how to do that. Things like fireproof safes and safes under the floor, all kinds of things. You don't just keep it in the sock drawer, folks.
True. Midnight gardening.
That's a critical thing. Now, one last thing before we go. One of the issues that a lot of people have raised about gold is concern that, they saw this big price spike after the great financial crisis. We saw a big run up in, I think, 2011 or 2012, I forget which year it turned, and then it turned back down. What caused that, and is that likely to happen again?
Well, bull markets, come and go. Bulls are replaced by bears, and bears replaced by bulls. So that's not abnormal. This is our third bull market now since we decoupled the dollar from gold. So the first one was 71 to 80, second one was 2001 to 2011, and this one is underway now. They tend to be about 10 years long. They tend to be significant, right? The last one saw 650% appreciation in gold and 1,000% appreciation in silver. I don't expect this one's going to be any different, but I don't know. It's natural for them to turn. I look at it this way. For the metal I buy for wealth insurance, like I said, I never sell it unless I have an emergency. And that's how I deal with that. That's in a separate bucket. If I'm looking to profit from a bull market, I rebalance all the way along. And at that point, I don't care if I miss the top. I've taken profits all the way. If I have a 10% allocation for profit and it goes to 20, I sell half. There's no emotion. I just do it.
Well, this is something that we've often told the Bauman letter readers as well with our equity positions, that the best way to guard against missing a top is to take profits on the way up. The same thing goes. But I think what you're saying, Rich, is very important, that you really got two parts of your personal portfolio in gold. One is the gold that just stays there. It never moves. And you don't really care at the end of the day what the price of gold is. It's your long-term storage. Then you got another part maybe where you want to speculate on the gold price where you're doing the same thing. Those are two different things. You're not speculating on the gold price with the gold coins in your safe. You're doing it with some other mechanism. And I think that's an important distinction because a lot of people, I think, forget that.
Yeah, absolutely. And I would throw silver in. Silver is my favorite speculation in an environment where you have a burgeoning bull market like now, because it tends to lag gold initially. Once the trend's established, it catches up and it tends to outpace because it's a smaller capitalized market. That's why we saw 1,000% out of silver last time.
And it's just done that this year, hasn't it? It's been crazy.
It has.
What about
like 57% on the year?
Yeah, that's right. And what about the more exotic metals, the palladiums and that sort of thing? Do you guys deal in those as well?
We do, and you have to be careful there because they're interchangeable in various processes used for catalytic converters and things of this nature, jewelry, and they're more industrially driven. So you just have to be a bit more careful there. The way I deal with that is I have a smaller allocation.
Right. So, Rich, this is all great information. If somebody wants to get a hold of you, what's your website? How do they go about contacting you?
Fantastic. Two ways. So the website is www.assetstrategies.com. ASSETSTRATEGIES. The other way is just call us toll free. 800-831-0007. 10 better than James Bond.
Right. And Goldfinger.
Yes, exactly. We all know that.
Let's hope they remake that someday. Rich, thanks very much for coming on the podcast this week. I'm sure you'll get some calls. Folks, remember, this is about the long term. This is about really protecting your wealth over the long term. And I think gold, as we've spoken about, is something that can do that for you if you approach it in the right way. Rich, thanks very much. We'll talk to you again soon.
Absolutely. My pleasure. Thanks for having me, Ted.